Susquehanna International Senior Equity Research Analyst. He covers the home building stocks and the home improvement companies. Jack, thank you very much for joining us. Let's talk about whether or not this demand is here to stay.
Sure, Dom. Thanks for having us. The demand, we think, is more secular than it is episodic. When you look at really where we've come over the last 10 years, we've underbuilt structure for a number of years. Credit coming out of the crisis was tight and began to loosen. And on top of that, you layer in a demographic wave that, while delayed, the millennials is now beginning to hit their stride in terms of peak home buying years. And so you put those things together, we've got excess demand, we've got undersupply, prices are going up, rates are low. You know, this is more than just, a work from home scenario in 2020 or, people taking advantage of low rates. We think this is a much more broader economic development than what we've seen so far. So we think we've got another couple of years to go on this.
So, Jack, I mean, we're also talking about when it comes to new homes, they run the gamut in terms of price spectrum, right? I mean, there's the lower-end builders, there's the higher-end builders, there's everybody in the middle. Where is the most robust demand coming from, and which stocks have outperformed because of that demand?
Right now, we really favor the entry level. So you think about builders like D.R. Horton, Century Communities, and builders have been pivoting, names like Taylor Morrison, from building higher priced homes, maybe more trade-up homes, to that serving that entry level buyer. That's also where the supply on the existing side tends to be the lightest. You get a lot of institutional buyers acquire homes out of the financial crisis that would have been good prospects for entry level buyers on the existing side, but they're just not there anymore. And so the new home builders are uniquely positioned to serve that first time buyer cohort.
Yeah, Jack, I'm curious about the input costs, right? I mean, been a lot of focus on the fact that we have seen quite a number of commodities rising in price. Lumber, for example, had a pretty strong run last year. How does that play into the mix in terms of margins for the home builders, and also in terms of what that means, how that translates to the inventory that is coming out on the market and those price points?
Yeah, it's probably the biggest debate in the space right now. Do you let pace run hot, you let sales run hot, and try to figure out how to deliver it later, or do you manage your volume and your sales activity so that you can stay ahead of your supply lines, if you will? The good news so far is that home prices are up nicely over the past year, both on the new and existing side. So a lot of those input costs that are rising have been offset. Obviously, the bigger the builder you are, the more negotiating power you have with your trades, with local national accounts, that sort of thing too. And then interest rates, right? Incomes can't go up, or home prices rather can't go up faster than incomes for an extended period of time. Rates are at record lows, so that's been a nice release valve as well. So far, the builders have been able to offset, and margins are generally moving in the right direction. But I think where the builders are concerned today is, hey, if we sell a lot of homes in 2020, but have to then deliver them on 2021 costs, that's something we've got to be more careful about. So you're seeing the builders make much more intense decisions on that pace versus price balance.
Shepard Smith here. Thanks for watching CNBC on YouTube.